Well, good morning. This is James Hecker, mortgage advisor, NMLS number 214601. And this morning I want to talk to you a little bit about credit. Why is it important to the mortgage process? And what you can do about it if your credit isn't as good as you would like to get the best mortgage and interest rate available. So, first of all, let's talk about what kind of a difference it might make. Just as an example, on a $450,000 loan with a 720 credit score, you'll have a certain payment. But if for that same amount you have a 620 credit score, your payment will be about $350 a month more with a 620 credit score over the 720 score. And if you have an even higher credit score, 780, it's even a little bit better for you. So you're going to want to take a look at your credit score prior to beginning to look at homes, because if you've had any issues at all with your credit, or even if you don't believe you've had issues with your credit, there may be some inaccuracies on your credit. So that's where we'll start, inaccuracies. So when the bureaus, there are 3 bureaus, Experian, TransUnion, and Equifax, and they compile the data from lenders, credit card companies, and mortgage companies, and car loan companies. They compile that information on you and keep that in the bureau. And when you go to apply for a mortgage, the credit companies merge that information from the 3 bureaus. Equifax, TransUnion, and Experian are bureaus. And then we have companies that will merge that information into what's called a tri-merge, so that we can use the credit score in determining your likelihood for foreclosure, really is what it's about. And then that determines the pricing, because the pricing is based on risk. If you have a lower credit score, you're a riskier borrower, according to the guidelines, and so you pay more. So, inaccuracies. Well, there could be things on your credit report that do not reflect your actual payment record. And that's very common. In fact, it's one of the things that the Consumer Finance Bureau is looking into in regards to regulating credit bureaus. And you want to know that. You want to take a look at that and go, wait a minute, that's not right. I never had a late with that company. And then somebody like myself can talk to you about what you can do to get that information corrected. One common thing that we see is juniors. So if you have the same name as your father or your grandfather or something like that, and they had some credit issues that weren't your own, you sometimes will see that on your credit report. So I can give you some ideas about what to do to get that stuff removed. So that would improve your score if you do get those things removed. So that's inaccuracies. Now, there are other things that may be showing up on your credit report that maybe they're not inaccurate. Maybe they're actual late payments or a foreclosure or a bankruptcy. All of those things affect your credit score. Now, the longer period of time that has transpired since that event, the late payment, the foreclosure, the bankruptcies, the less it impacts your credit score. So your credit score is self-repairing with time. But let's say you've got something on there that is affecting your ability to qualify for the best rate. Like I'd give the example of, $350 a month difference in payment for a 100-point difference in score from 720 to 620. So I can give you advice and talk to you about the things that you can do to improve your score. And some of those things you can do relatively quickly within, a couple of weeks or a few weeks or a month or 3. And some of them take longer and more effort. So that's something that, again, you want to know about prior to actually applying for a mortgage and going out there and beginning to look, because you don't want to find the house of your dreams and then apply for your mortgage and find out, oh goodness, we've got all these things on my credit report that are going to cause me not to be able to afford the payment that this home would come with. So when it comes to the credit score, there are certain things that impact the score more than others. And one of those things is called utilization. So if you have $100,000 in credit lines available through all of your credit cards, that's kind of a lot for the example, but just let's use that as an example, and your total balances are more than $35,000 or 35% of total available credit, that's going to be a negative impact on your credit. Or if you have a $1,000 credit limit and on that account you owe more than $350, that's going to be a negative impact on your credit score. And so utilization is the first thing you want to look at. Am I keeping my overall utilization and my individual utilization on each credit line down below 35%? And that has a big impact on your score. The next thing that has the biggest impact is late payments. So if your mortgage or your credit card or your car payment have late payments on there within 6 months, that's going to have a devastating effect on your credit score. If it's greater than 6 months, that impact is less. If it's more than 2 years, that impact is even less. So let's say you have a late on one of your credit cards. It's not out of the question to contact that credit card company and say, hey, look, I did have this late, but it doesn't reflect my pattern of payment. I've made all of my payments on time in the 10 years or 5 years or 3 years that I've had this credit card. And here's what happened in that circumstance. My bill got lost, or somebody was sick in the family and I had to take care of that. Can you please reverse the late, remove that? And in some cases, the creditor will do that because, hey, we're all people and they understand that. They're human beings as well. Occasionally you will get somebody who just is hard and fast going, oh, no, absolutely not. We're not going to do that. Best thing to do in that case is just stop fighting them and then, maybe try again later. But you need to remember that you're asking a favor. And so you can't force anybody to change your credit history if it's accurate. But sometimes they'll review the circumstance in the big picture and give you the benefit of the doubt. And again, that's something that I can help with. Other things, as I had mentioned, are foreclosures and bankruptcies. Those have a longer impact on your credit score and your credit in particular, because many loans, you can't get another home loan for at least 7 years after a foreclosure and at least 4 years after a bankruptcy. Now, there are some exceptions to that. Some programs allow a shorter period of time, but for the best loan available for your situation, you may have that waiting period to go through. And that's one of the reasons that FHA is a good alternative for people over conventional financing that might have had a bankruptcy or a foreclosure. And, because the waiting period on a foreclosure with an FHA loan is only 4 years. And so that obviously is a lot more generous than having to wait 7 years for a foreclosure on a conventional loan. So, and there's drawbacks, there's pluses and minuses to that. So I really encourage you to give me a call and, talk about your credit situation with me. There are ways that you can get your credit report from the bureaus for free. And you just go to annualcreditreports.com and you are legally allowed to get a free copy of your credit report from the bureaus if you've been turned down for credit, or otherwise once a year. And but you're not going to get your credit score that way. And those services that are third party that monitor your credit, sometimes your credit card will do that. Sometimes there's services called Credit Karma, things like that will do that. They won't necessarily have the same scores that are going to come out on the mortgage credit report. So sometimes it does make sense to go ahead and start that pre-approval process even before you're ready, so you can see what that mortgage credit report shows. It's a little heavier weighted because it's a larger obligation, and the credit scores tend to be a little bit lower than they might be if you're applying for a car loan or a credit card. And again, if you want to know more about that, by all means, give me a holler. You can improve your credit. You can protect your credit. If you don't have any problems with your credit, there are things that you should be doing just to keep an eye on it. Look at that annual reports, annualcreditreports.com on an annual basis. Keep an eye on what's going on with your credit. Make sure that there's no inaccuracies, things that are reported in error, and have somebody on your side like myself who can give you advice. I don't do credit cleanup. There are third-party companies that you can pay to improve your credit, and I do not do that. There are some strict regulations around that, and that's not what I'm talking about at all. I'm just talking about sharing with you my experience in dealing with credit reports, some of the things that may help you improve that situation on your own. So I look forward to speaking with you. I hope that you are having a wonderful week, and let's talk about credit report and getting you into a home.